Everyone. I want to welcome you to today's portion of this year's Agricultural Growth Summit hosted by the Kansas Department of Agriculture. My name is Mike Beam, and I have the pleasure of serving as your Secretary of Agriculture. Those who have participated in the agro sector in the past realize that it's been a one-day event, and it's been quite energizing to see all the various sectors and folks from across the state gather at one location to talk about how we can make this state even stronger in agriculture and also celebrate all the success of the past. But obviously we have a different circumstance, but we feel like this manner in which we have the virtual connection and let folks from across the state chime in on the various sectors will be perhaps just as helpful and rewarding as being in place in person. I think most of us know that agriculture is very vital to the state's economy. The direct contribution that ag makes for our economy is over $46 billion annually. And agriculture workforce represents over 13% of the workforce. We are also a heavy hitter when it comes to comparing it to all the other agricultural states. The 2017 Ag Census listed Kansas number 5 in the total value of agricultural production. A couple of those states ahead of us are much larger geographically, but we are a significant player here in the Midwest and feeding not only our United States citizens, but folks all across the globe. Today's focus, of course, is on beef, which is the largest sector of the Kansas agricultural economy, representing over half of the agricultural cash receipts. We have perhaps the most diverse supply of forage and feed grain resources, but more importantly, there are countless iconic leaders within all the segments of the beef sector, which I think has led to the sustainability and growth of this industry. And I'm confident that the presentations that you'll hear today and the questions and dialogue will spotlight that. This will be, what we gather today will be helpful for the Department of Ag, but I think all the stakeholders to continue to focus on what have we done well, what are our opportunities, and to work together to make it even better. So thanks again for joining. And at this time, I'm going to turn it over to Suzanne Ryan Numrick to start off the session. Thank you again.
Thank you, Secretary Beam. I am Suzanne Ryan Numrick, and I am with the Kansas Department of Agriculture, Division of Agriculture Marketing. We're so glad you've chosen to spend time with us today. We'll be focusing the next hour or so on the Kansas beef sector. The vision of our agency is to provide an ideal environment for long-term sustainable agriculture prosperity and statewide economic growth. Our sector sessions provide the platform to entertain opportunities and barriers to agriculture industry growth for our state. First, I'm going to go over some housekeeping items that I would like to review before the session begins. During the presentation portion of the webinar, all participant microphones will be muted. If you have a question during the presentation, please submit your question using the Q&A button or chat button at the bottom of your screen. If you're joining us via phone, feel free to text me questions at 785-817-2137. Written questions and comments will be monitored by the Kansas Department of Agriculture representatives. At any time during the webinar, when asking a question, please include your name, city, and organization. And lastly, this webinar is being recorded and will be posted online. I will now introduce our moderator for today's discussion, Dr. Larry Cora. Dr. Cora served for 25 years as a K-State Animal Science and Industry Department Beef Extension Specialist. After retiring from K-State, he went to work for the National Cattlemen's Beef Association as Director of Production Systems and served 17 years as certified Angus beef vice president of supply. He is currently a supply chain consultant for Select Sires. We're really happy to have you joining us this morning, Dr. Cora. And now I'm going to turn over to you to introduce our next panelist.
Well, thank you, Suzanne. I look forward to this session. I always am intrigued by sessions that focus on where an industry is going. And I think it's extremely important for Kansas, because of the economic ramifications of the beef industry, that we have an open discussion and a very candid discussion today in terms of helping the Kansas Department of Ag create their focus and priorities. So looking forward to this. Incidentally, I did check with Dr. Fauci this morning, and we can get by without using masks. So we're in good shape on that aspect. The other part of it that's fun today is I do get a chance to introduce a couple of folks that are two of my very favorite people in the cattle industry. I think one of the things that some of you have heard me say many times is the neat thing about the beef industry is we get to work with some really talented people that are also not only talented, but extremely good people. And our two folks that are joining us today to do the initial presentation fit that category. Back to housekeeping, we will go past the cattle facts presentation and then into Callahan Grunn's comments on the traceability program that's going on for a few minutes, and then we'll open it up to questions. So do be jotting your questions down so that we can, and comments, because that's going to be a very valuable part of this whole presentation. So with that, I want to introduce our folks from Cattle Facts. Cattle Facts provides a tremendous service to the beef cattle industry in terms of market outlook and assessment of where we're at in terms of numbers. And so I'm really looking forward to two folks that are very well qualified to talk about that. All of you know them quite well. They've spent a lot of time in Kansas over the years. So I'll turn it over to Randy Block and Kevin Good. Great to have you guys with us today. We look forward to your comments.
Thanks, Larry. It's great to be with you all. A real pleasure for both Kevin and I to have a chance to address you. Obviously, as you look at our front page here, we can't spell, but I hope we have some good insights for you and some good information for you as we go through today's comments. What we're going to try to do today is kind of chalk the field for you of where things are, how Kansas plays such a vital role across this industry, and how we see things unfolding as we look to the future. Not only the future of the U.S., but also the situation as we look at the global marketplace and the opportunities that are there. So we're going to go through quite a little data and information with you, but I think it'll give you a feel of how things are shaking out and what some of the real opportunities are for the industry as we go forward. So with that, I'm going to shift in here. And let's flip over here. Larry, are you seeing my screen in here with the first screen?
No, I do not see I see you yet. I don't see your slide.
All right, thank you. Let me just see here if I can pull that back up here. There we go. You should have me now.
Yep, you're on.
So very good. What we're going to do is spend just a little bit of time looking at the situation with the U.S. and global marketplace. Then we'll look specifically at Kansas's role in that. So let's go ahead and get started. Again, I think if you step back in here and you look at the industry in total, this is U.S. cattle countries around the world with the cattle populations. And just to be very clear, this would include water buffalo, which we get in some of these different parts of the country, or parts of the world, which would be called bovine product. But the U.S. is number 4 when it comes to total inventory numbers. But I want to be very clear, the U.S. is the number 1 beef producer on the planet. So the reason I wanted to start with this is, depending on whether you're looking at total cattle numbers or you're looking at production numbers, you get a total different read in here. And the reason this becomes so important is what Mike shared earlier. Kansas is in the business of producing high quality finished beef or fed beef, which many of these folks around the world, our competitors around the world, produce very little high quality finished beef. So we really are in a different business than a lot of the other people that produce cattle around the globe. If you step back and you look at our inventory situation, the U.S. cattle inventory peaked in 1975. We had 132 million head of cattle in our inventory. And obviously, as you look at this, you can see these inventory numbers rebuilt. We moved these numbers back up. We had a 6.5 million head increase in those numbers, 3 million more beef cows after we came through the last drought, 2 million more feeder cattle, and 1.5 million more fed cattle that were moving through the system. Well, there's a couple of key things in here that you see that happened. We went through a long-term decline in inventory numbers from the late 70s through the late 90s. That was the demand drop. That was beef demand in the United States that had been basically cut in half, that was driving that overall inventory trend. This last drop in inventory numbers that you see over here in this phase, this was drought driven. 2008, 2009, 2010, 11, and 12. That was a drought driven situation and one that really it was out of our hands. But the numbers have bounced back nicely in here now. Again, we've taken out the long-term downtrend. We've reversed that. The reason we've reversed it is because we've seen beef demand show very significant growth in here over the course of the last 15 to 20 years. And we'll go into a little more detail with that here in just a few minutes. So again, if we look at where we are from an inventory standpoint, the U.S. inventory, our beef cow numbers are smaller than they were back in here in the previous cycle, but look at our beef production numbers. U.S. beef production has never been bigger. Record large beef production in here in 2020. Again, this is a function of weaning a higher percent live calf crop, better genetics, better nutrition programs, carcass weights being larger on an annual basis. All those things contribute to more beef production per cow, if you will. So again, the industry continues to become more and more efficient as we look down the road. We think these efficiencies will continue here for the next several years. We don't see any real slowdown in that as we get better and better at what we do. Now, the carcass weight trend, this is pretty real, isn't it? This shows you that 5-pound increase on an annual basis. When you're increasing carcass weights that much, for example, this year we've got a much bigger increase in carcass weights because of the situation we got into with COVID-19 when we couldn't harvest all the cattle on it in as timely a fashion in here through the spring and through the first half of the summer. So carcass weights are contributing an additional 3 to 3.5% more beef to the overall industry in a year like this. In a normal year, carcass weights will add an additional 2% or so to the overall beef production trend. So just keep that in mind. Again, with that kind of productivity increase, and for those of you who mentioned, Suzanne mentioned the sustainability trends that we had earlier. Think about how much more production or product we're able to harvest off each of these animals. Again, I think that's a great story with these productivity trends, and we don't see that changing as we go down the road. I mentioned to you the demand trends that we see here in the industry. And again, I think this shows it very, very well. If you go back to 1980, from 1980 to 1998, beef demand was cut in half. Again, you can see that on the scale in here. If you look at this, we went from a situation that, I got to move that back here. We went from a situation in here that the overall trend in these numbers went from 100 to 47. Again, this is what I was talking about, a 50% drop, more than a 50% drop in beef demand as we came through that time period. As that was going on, let's be honest. The United States cattle and beef industry was on the ropes. it was on the ropes. We lost 400,000 producers as we went through this time period. And again, it's pretty easy to understand why that occurred, is there was no profitability in the industry. As you've seen things change, look at the growth and demand we've experienced, even though we've seen all this increase in production that I showed you on those previous charts. We're getting along well. U.S. consumers like what the beef industry is producing today, and they're voting with their pocketbooks. And quite frankly, the U.S. Beef industry is winning very well. You can see this in here as you look at the trends in here in consumer expenditures. This is a significant growth. 1998, the U.S. consumer was spending $46 billion a year on beef. Look where that has moved to today. Again, in 2020, we're going to see that number at $120 billion. That's a 122% increase since 1998. The industry in total, as you look at this and you look at what we've done, you come through here, the beef industry in total has gained market share. We've gained 7% market share in spending as we've come through this. So total spending for all proteins has increased. But look at the chart here. Broiler spending, as we all know, we consume half of our consumption of meat protein in the U.S. is poultry. And beef, we consume about 57 pounds of beef on an annual basis, about 52 pounds of pork on an annual basis. You look at these numbers in here, again, beef spending has exceeded the combined total of both pork and poultry as we've come through this last 20-year time period. So I think this speaks very well that the industry has done a much, much better job of connecting with the U.S. consumer. We're doing a better job of producing product that they want, that differentiates itself, will provide product in all different fashions. If they want natural, if they want source verified, whatever it may be, we have the ability to produce those products for the different groups of consumers that are out there. Now, as you look at what has been one of the big drivers in here in this demand growth, this has been the increase in quality that we've seen across the industry. And again, if you look at this increase in quality and see what it's done, we basically have gone from 50 to 55% of the animals that are grading choice or prime back in here 20 years ago to where today 82% of the fed steers and heifers, high quality fed steers and heifers that we harvest this year will grade choice and prime. This is a significant improvement in quality and consistency. And this is what we believe has been the main driver in the demand growth that we showed you on those previous charts. So again, these are trends that we believe need to continue as we look down the road. If the industry is going to be successful, what we have to do is we have to continue to add to these attributes. We need to find other things, listen to the consumer, and make sure we're addressing those as we go forward. And we'll give you what our thoughts are on those as we focus on some of the forward-looking aspect of today's presentation. I think this chart shows it very well. Look at what choice demand has done in here over the course of the last 20 years. Choice demand's up 60%. Select demand's flat. So again, you look at these numbers in here, pretty well tells what the consumer wants. They want that higher quality, more consistent product day in and day out. Well, how do the consumers vote? I think if you go back and you look at these numbers, this data takes you back in here to the time period of 2000 to, 1980 to 2020. Both Kevin and I basically started with Califax in here in the early 1980s. So the first 15 years, 20 years of our career, we were in this. This was a grinder, wasn't it? This was a situation, the industry really wasn't making any money. And if I could just share this with you giving you a perspective, the total industry profitability on an annual basis, if you average this from 1980 to 1998, this demand low, you had 4 industry segments: the cow-calf producer, the stocker operator, the cattle feeder, and the packer, that had $32 a margin to split up between them. Now put that in perspective. Does it make sense why we saw so many producers leave our industry? Did it make sense why we saw such a large decline in inventory numbers as we came through that time period? Obviously it does, doesn't it? Look at the change in profitability the industry has experienced since that time period. If we look at the demand low in 1998 and we move forward, the average industry profitability since the demand low in 1998 is $248 a head. Again, and this is broken out by sector, these last few years, our margins for cow-calf and stocker operators, even cattle feeders, have been pretty doggone thin. There's not much profitability there. In fact, as everybody I think understands, the packing industry is where the lion's share of the profitability is right now. And again, that's because we just don't have enough shackle space in our industry. But I think all in all, what this shows you though is the industry has done a good job of building demand. We just need to now take the next step, and the bottleneck that we have is not enough harvest capacity that we'll need to address as we go forward. I think this does tell a pretty good story of what growing demand does and how important this is to the Kansas industry, and what Mike shared with the overall contribution that agriculture and beef in total give us back for this industry. Kevin, did you get the controls there? There you go.
I just requested.
There you
Okay.
go.
There you go. I'm back on you, Randy.
So let's see here. You should want your request again, Kevin.
Okay.
There you go.
Okay.
So Kevin, if you go to, there you
Yep.
go. You can go to the other version on your, and you'll pull one up that doesn't have the split screen.
And we're working here. Next section here we're going to talk about is dialing in to the state of Kansas as far as some of the drivers that we have, especially as we think about the trends that we're seeing recently from a number standpoint, some of the opportunities that we see in here as much as anything as far as where we go forward within our industry. And as we think about that in particular, might just have Tanner or one of those guys come in. We'll get a little technical help as we talk. Just as a clarification, as Randy talked about the productivity within the industry, another comment that I would have there, let's not forget the importance of the dairy industry and beef production. As you look at that, gains over time, you think about how many cattle we've harvested 30 and 40 years ago as veal, you know, that number is 4 or 5 million. Today, that number is under 600,000. And at the same time that we are not producing the veal product, more and more of those Holstein calves are now ending up in production as far as beef production, as well as we think about the onset of beef on dairy cross from a production standpoint, adding to our beef supply. So as we go forward in here and we think about the importance of the dairy industry, I think it's important to recognize that it will continue to be important as far as beef production is concerned going forward. With that said, and technical activity by our younger staff, now let's just take a look at Kansas number. As we go forward in here from a long-term perspective, and we think about where we're at, we can roll it all up in one slide and say, hey, from a total number standpoint, third on the list, beef cows, 6, dairy, 16, feeder cattle and calves, 3, cattle on feed, 2, and really is where we come down, I think, to the crux of our discussion today is also thinking about the amount of feeder cattle supplies that we have outside of feedlots, not only in Kansas but around us. The amount of fed cattle that we marketed each year, now we're number 2, and fed slaughter where we're tied with number 1. And so the message here as we think about beef cow numbers, you know, we know that the corridor, central part of the U.S. is where the bulk of the beef cows are located, both north and south of Kansas. We're right in the midst of that. We take fed cattle marketings. We know that we're right in the middle of that as well. And, you know, as we think about the feeder cattle and calf supply in here, and I'm having just a little bit of technical challenges in here. Bear with me here. And here we talk about the feeder cattle and calf supplies on the right-hand column. Kansas is number 3, so we think about the available supplies, not only in Kansas, but also north and south of us, Oklahoma, Nebraska, east of us, in Missouri. We recognize that we've got, from a heartland standpoint, we've got the vast majority of the cattle and feeder cattle and calves very close in proximity to the state of Kansas. And so as we think about our likelihood of cattle on feed numbers, where we rank number 3 today, and we think about fed cattle marketings, where this past year we surpassed Texas, and that's going to go back and forth, you know, as we go forward in here, because cattle on feed numbers are elevated both in Texas and Kansas. We've got to recognize in here that we do have ample supply of cattle, not only on feed, but that are being marketed as we think about in the state of Kansas. And with that said, let's take a look at one of the big drivers in here as we think about it from a big picture standpoint. On the top, we can see the location of feed yards, 4,000 head and above, and we can see the vast majority of the cattle on feed are located in a box, basically from just south of Amarillo up into central Nebraska, Kansas right in the heart of that. On the bottom side, we can see one of the major drivers as we think about it. We're in the sweet spot in the state of Kansas. Good weather and still availability to feed grains and roughage. Big part of that is driven by the aquifer. We need to recognize that that will continue to be important as far as water management as we go forward. And as we think about the likelihood in here of what's happening in Kansas, you can see that planted acres have increased over time. Here we're looking at 20-year data. And so you can see in both the blue and also the orange, corn and beans, we've seen a distinct uptrend as far as the acres planted within the state, at generally the expense of less wheat being planted. And so a big part of it is that when we talk about it geographically, we've got a sweet spot. We've got the cattle, we've got the climate, we're increasing the feed supply, and as we think about it, and a big part of our discussion today is the packing capacity that we have within the state compared to the surrounding states. From a fed cattle marketing standpoint, you can see over time we've had some very major events as you think about not only in the state of Kansas, but also thinking about the industry as a whole. Here we're looking at fed cattle marketings by region. If we really want to step back from 2000 was a peak marketing year or harvest year for fed cattle in the U.S. at 30 million head. That number dropped dramatically. It dropped down to basically 23 million head at the cycle low in 2015. And so as you think about the decline in marketings, we had a disproportional big number of those marketing decline in the state of Nebraska, or excuse me, in the state of Texas, the Panhandle. The Nebraska market through that time frame actually showed some steady growth, and the Kansas market was adversely affected by the swift fire out in Garden City, Christmas time of 2000, the Tyson closing of the Emporia plant, and the Cargill plant that was closed in Texas in 2013. But as you think about since the cycle low in 2015, you can see that a big proportion of the growth has occurred in the state of Kansas. And as you think about from that cycle standpoint, during this 5-year cycle, we've seen the bunk space in Kansas increase anywhere from 250 to 300,000 head. We've had a lot of feed yards that have added bunk space. And so you can see that sweet spot and where the cattle feeders wanted to invest more of his resources has been in the state of Kansas here over the last 4 to 5 years. At the same time, and where we'll go with this discussion, that we've added capacity, bunk space, we haven't added any shackle space, have we? So we still have that challenge, as Randy alluded to, that we're going to talk about, that we still have a challenge or a bottleneck between the cattle feeder and the packer as far as leverage, and therefore money flow coming down from the consumer to the cow-calf producer. You can see that all the areas have increased to some degree since the cycle low, but very well sticks out, as we think about Kansas showing the biggest amount of that growth. We can go back farther, go back to the 1980s, 90s, 2000, and see that the growth, really from a long-term perspective, we can go back and look at 1980 forward. You can see that the growth areas have been in the Central Plains, Nebraska, Texas, and Kansas has actually led the charge if we want to use 1980 as your base. So let's get down and talk about the state of Kansas. And here's just a look in the listing of the packing capacities by the packers that are within the state. And you can see basically 26,000 on a daily basis. We would suggest the harvest on a Monday through Friday is 98,000 fed steers and heifers on a U.S. basis. And obviously with COVID, since COVID, that number, if we looked at the month of July, we've averaged 93,000 on a daily basis. So it has been diminished some with the labor restrictions that we have in the packing plants today. But the message is the same. We take a look at Kansas, it's at number one, tied with number one as far as the packing capacity. Nebraska's the same, and Texas would be number 3. And so we do have the capacity on hand as we think about it, but nonetheless, with the increase in on-feed numbers and marketings, there is a need, as we think about, for additional packing capacity within the U.S. industry. And logically, we're going to suggest that that packing capacity be best suited in the state of Kansas as we think about where the cattle are on feed from north to south. Just an illustration of the major packers that are involved. 3 of the top 4 packers would be located in the state of Kansas. JBS would be the one that is not, although a number of cattle do move out of the state of Kansas going to JBS. At certain times of the years, they're going into Grand Island or up to Greeley. Other times they're heading to Dumas to the south. So as we think about the industry as a whole, and really where the discussion goes here, as we think about the amount of cattle we're harvesting, and if you think about the red line in here, that's the amount of cattle that are harvested on a weekly basis. And then the blue bar represents the capacity. And so you can see from 2005 to 2015, we had more capacity than we had cattle going through the system. And that's a time frame where we're going to suggest and look at it in more detail that we lost packer profitability, and therefore they exited the business and reduced the capacity that we had. Since 2015, the opposite has occurred. You've had an increase in supply going through the system. This year, on average, we came into the year expecting to harvest 507,000 on a weekly basis, and we would suggest on a 40-hour week that we could harvest 490,000. Therefore, you can see that the leverage would be in the packer's favor. In other words, we've got more cattle going through the system than we've got shackle space. It has to incentivize the packer to harvest more than 40. He has to continue to harvest a lot on Saturday to clean up the cattle. I believe this does a very good job of really showing, as Randy alluded to, we've had some very big profits at the packing segment over the last few years. And this is just to look at, again, I mentioned earlier at 2000, we harvested basically 30 million head of cattle. That number declined substantially as we went from 2000 to 2015. As that occurred, you can see the number of plants that were closed. into more right size shackle space with the number of cattle going through the system. Since 2015, the opposite has occurred. Now we've got more cattle going through the system. We have not expanded the shackle space to a point that can clean those cattle up in a 40-hour week. Therefore, the incentive is a financial incentive for the packer to run those plants harder, run more Saturdays, and you can see that's at a profitable level. So you think about the last couple of years in particular, and really where the message is, if you've got that segment of the industry that's making, let's say, $200 bill, what would it look like if that number went back to a longer term average? Let's say it's closer to $50. $150 throughput or more dollars, as Randy alluded to, with strong demand, more of those dollars trickling back down to the cow-calf producer. If we take $50 and spread that over a 5.5, 6-weight calf, that's $25 a hundredweight. That's real money. And so as we look at the industry today, one of the real challenges is a leverage piece, and one of the ways to improve that throughput of dollars is to right-size shackle space versus cow numbers. You can do it two ways. Hopefully we do it by increasing shackle space rather than diminishing our cow herd. Let's just take a closer look at the beef and dairy industries within the state. These are some of the factors that we would suggest that do influence a producer's appetite to expand or contract. Obviously, if you think about profitability and weather, they're at the top of the list. There's some other things that are headwinds as we think about getting involved in ag as well as the cattle business. And you can see, obviously, land values, input costs, and some of those other things do have a very big influence. Any way that we can have help to increase the availability of capital for our younger producers, increase the availability of capital, as well as a government policy that would be conducive to increasing, let's say, packing space or capacity, would be very very good, not only for Kansas in particular, but also for the nation. We're in the process last year and again this year with calf values where they're at, as well as a challenge from a La Nina weather pattern that we are experiencing today in the central and southern plains, of going ahead and seeing the second year of liquidation this year. We take that down to just Kansas, and you can see that beef cow numbers have been rather flat over time, looking at the last 20 years. Had the severe drought that influenced them as we think back in 2013. We've came back from a number standpoint, but obviously last year we started to have some influence from drought and softer calf values that brought those numbers back down. So from a longer term perspective, your cow herd has been pretty flat within the state of Kansas. If we looked at it from a geographical standpoint, the southern plains, which Kansas is the northern end of that, the big portion of that is driven by the state of Texas. You can see the drought in 2013 really did affect, from 2011 to 2013, really did affect the prices and also numbers as we think about the southern plains region in particular. And so from a geographical standpoint, bulk of the cows are setting in the central plains. Mother Nature really does drive the ship. Just an illustration that over time we've got fewer and larger operations. You can see that if we take a look basically at those of 500 head and above, they've gained about 4% market share. We look at 100 to 500, and they've gained about 7 or 8% market share. So you can see that we are becoming more concentrated at every level of agriculture. Shift gears and talk about dairy here for a few minutes, then turn it back to Randy as we think about some of the things we see from an international standpoint and going forward. The dairy industry, as we think about it, you can look at it long-term, pretty flat supplies, aren't they? They've been growing here for the last 15 to 20 years, but not a lot. One area that has grown has been this southern plains. We've seen an increase of about 400,000 mama cows here as we think about from 2000 to 2020. If you break that down in the southern plains, Kansas has enjoyed part of that growth. We've seen the Kansas dairy herd go from 88,000 to 167,000. That's about a 3.5% growth rate per year. In our opinion, we think that is a growth area that will continue. If you look at it geographically over time, the dairy cow herd went from the East Coast and upper Midwest to the West Coast. Now it's centering back into the Central Plains is really the growth area along with the Pacific Northwest. We see opportunities here from a region standpoint to continue to grow that dairy base. And with that, we also recognize that we're going to continue to see more of the beef on dairy cross as we think about some of the things we go forward in here from a beef production standpoint. Some of the big drivers from a dairy standpoint short term have been milk values that frankly have been extremely volatile year to date. With COVID, first with the lack of demand at food service, they fell down to $11. Now they're record high. As we've taught everybody, they've stayed home to drink more fluid milk, and you're starting to open up more restaurant business, which has been supportive as well. From an export standpoint, I think this ties in with, as Randy goes in and talks about the export markets from their other proteins, we've seen a tremendous growth in exports over time for dairy products. And so it's not only domestic demand that's improved in here, but we've got to think more globally on all of our ag products as we go forward in here. You can see that we've seen a tremendous amount of value increase. We look at the 5-year compared to last year, and year to date, where more and more of these products are being exported and added value. So as we think about that, as we turn the page and turn it back to Randy, I would just suggest that we take a hard look in here at Kansas from a long-term perspective. We're in the sweet spot, cattle numbers, climate, feeds, and so from a logical standpoint, I think it all points to if we're going to continue to get more of the better demand dollars migrating back into the production side of the business, we're needing to center and think pretty hard about adding shackle space within the state. Randy?
Nice job, Kevin. I think you did a great job of going through that data and giving us all a good perspective. Let's shift gears now and move into a little more of a global conversation, because I think this first note in here on this chart does a great job of just underscoring why global markets are so important for us if we are going to be able to grow our industries over time. Only 4% of the world's population lives in the United States, and the global population is increasing at a rate of 83 million people a year. So when I think about those two things combined, and we look at the growth in incomes, we know that there is a direct correlation. As incomes rise, so does the demand to put more protein in the diet. We've seen that time and time and time again as countries or consumers in countries that basically have been on a rice and beans diet, they want to put a meat protein in their diet as soon as they have the financial resources to do so. And again, U.S. beef is a high quality protein. So a lot of those early entrants into meat consumption may go to other countries like India, where it's a much lower quality and lower cost product than what our product would be. But as those countries grow their incomes, that's where we have an opportunity to be a major player in exporting more product. If you look at the fourth bullet down in here, again, just think this through. $350 a head of the total value of every fed steer and heifer produced in this country this year will be derived out of the export markets. That's 20% of the total value. So again, that's a number that is doubled from where it was back in here when we had BSE in 2003. That number was at $175 a head. So we continue to see added growth in that. We think as we look to the future that the value of beef and beef byproduct exports could easily be adding $450 to $500 a head to the value of every fed steer and heifer another 5 to 10 years down the road. That's probably 10 years down the road before we'd see that type of growth. But we've easily been growing this number at the rate of about $10 to $15 on an annual basis. So when you step back and you look at the meat protein situation out here. This just gives you a 40-year view of what global meat production has done. Obviously, all of these lines are pointed up and to the right, aren't they? Pork is the largest protein from a global standpoint. I think if y'all think this through, it makes sense, doesn't it? Because of China. China has over 50% of the world's pork, or they did before they had the unfortunate incident with African swine fever. Again, another pretty good reason that we want to have traceability in our markets, to where when we have any animals disease problems, that we can be quick to react to it and keep from losing over half of our inventories or herds. And that's precisely what happened in the Chinese market, is they ended up losing over half of their hog herd population, which created some short-term opportunities for other providers of pork into that marketplace. Poultry is easily number 2, or broiler production is number 2 from a global standpoint, and beef is number 3. Well, again, that makes sense, doesn't it? When you think about the cost differential between those various proteins, and you think about the environmental, or the lack of a footprint in here. We don't have doesn't take as much land for our hog operations or our poultry operations to be able to expand. Now look at where the U.S. stands in all of these. I want you to look at the different color of the bars in here. And again, you can see the green bar is pork production. This is what I was alluding to earlier. China is the largest pork producer on the planet, but the U.S. is the largest beef and poultry producer and the 3rd largest pork producer. And again, if we continue to have a situation where we have state and local governments like we see in Kansas that will support our agriculture industries, we think we've got a very, very bright future of continuing to be a major supplier of protein, not only to consumers in the United States, but around the globe. Now, if you look at what we're doing in here, and I think go back to 1990 on the chart, the little blue tip that you see on the chart shows you what percentage of our total production was being exported. So go back 30 years ago, and again, there wasn't very much protein being exported in 1990 out of the U.S. to consumers around the globe. Look where that is today in 2020. That number this year is going to be somewhere between 18 and 19 billion pounds. And as we look in here to 2025, we believe that that number is going to grow to where it's in excess or approaching 25 billion pounds of protein. This is showing you trend line growth. Again, going back over time, and it shows us by 2025, the U.S. should be producing somewhere in the neighborhood of 110 to 112 billion pounds of protein in total. And again, nearly 25% of that could be being exported as we look at what our opportunities are around the globe. Now look at our production numbers of beef if we drill into this. And I want you to think about what Kevin showed us with the Kansas industry. 26% of our harvest, or 26.5% of our total fed harvest, is in the state of Kansas. And Kansas is one of the largest cow states in the country. It's one of the largest feeder cattle calf states in the country. It's got the 2nd largest number of fed cattle marketings on an annual basis. And the U.S. is the largest beef producer on the planet. And we have been all the way through here. This chart takes you back to 2025. Again, the reason for this is because of the yield per animal that we have. Our high quality fed beef production, again, it's a different product than what we see other countries producing on a regular basis. So I think that's important for you to differentiate. We're in a different industry than what a lot of these other people are that are just producing beef. Beef is not beef in the United States. It's a high quality product. If we look at our export situation, I think this gives us a great feel. The U.S. and Brazil export basically 50% of all the total protein that is exported to consumers around the globe. And again, we're pretty much neck and neck. Both of us in here at 17 to 18 billion pounds of exports on an annual basis. The EU, as you can see in here on the green bar, the third bar over, if you look at that, obviously the lion's share of those exports out of the EU are exports that are going into China to help fill some of the void that has been created with African swine fever. But this gives you a great feel of what our presence is, and again, put that in perspective of what Kansas's role is in generating these numbers on a global basis. This is what we anticipate that we're going to see from a trend line standpoint, U.S. beef, pork, and broiler exports in total. Again, we assume trend line growth in here on these charts to give you a perspective. And again, without some of the little diodes we've had here and there, we've been in pretty much trend line over time. We just had a few issues like BSE in 2004 that really skewed the data. Point I'm trying to make is you look at the billion pounds in here, again, we could easily be at 23, 24 billion pounds of exports. And again, the beef industry could be exporting somewhere up in here between 4 and 5 billion pounds of protein by the time we get into the middle of the 20s here. So just keep that in mind in its role. We always get questions on, well, why does the U.S. import as much protein that it does? And again, the reason we import as much protein as we do on an annual basis is because we need more lean beef to help satisfy our demand for high quality ground beef. We love our ground beef here in this country. Again, there isn't very many countries around the world where the consumers eat as much ground beef as we do in the U.S. And over 50% of our consumption of beef in the U.S. would be in that form. So we don't have as much non-fed harvest in the U.S. anymore because our cow herds are smaller. Again, we have more yield. We don't need as many cows. The situation that you have is we reach out to countries like Australia, New Zealand, Canada, Mexico, whoever it may be, and they help backfill some of our need for some of that lean product. As you can see, the last several years, our imports and exports have pretty well mirrored each other. Again, they're pretty close. Again, we're going to be right around 3 billion pounds each of the last 3 or 4 years for both imports and exports on an annual basis. We really don't see that changing very much from an import standpoint, flatten out in here, but our export trend should continue to grow. We talked about this in here, and Kevin, I think you had a great perspective in here. I'd love to hear you weigh in on the export value and what kind of contribution you think that makes today and how we should be looking at it as an industry.
Well, basically, Randy, we talk about on a per head basis, but you take that fed steer heifer, that's on top of 20% of the value is what you're looking at here from the last couple of years. And in reality, just going back to BSE in 2003-04, this is the first time that we're getting back to that type of percentage of value importance with our exports. Is just the last couple of years. It took us, basically almost 20 years to get back to that level. So let's recognize as we start talking about traceability and our total herd health that we need to be conscious of how much that really does add from a value standpoint to our industry.
And again, these are attributes. What our industry is focused on here over the course of the last several years is we focused on quality, haven't we? More high choice, more prime, more choice product, less select. And that has been precisely what the U.S. consumer has said to us. We want more of the good stuff. Now we believe that U.S. consumer is going to want more of the good stuff with more bells and whistles. They're going to want to know the sustainability story. They're going to want to know the source verified, the animal care, all of those things, the traceability, all of those are going to be value attributes that are going to be added to the system as we go forward. So just keep that in mind. Again, we think those are going to continue to add value to the U.S. marketplace. Again, you look at where the largest importers are. Again, not a big surprise. Japan is the biggest export destination for the U.S. market. Again, they're our #1 destination in here. China is a big importer of protein. That has really changed in here in the last few years with the amount of protein they import, just because of it's just nearly impossible for them to feed all of those people themselves. So they're relying on other parts of the world to help backfill that, and they get the job done. One thing I would point out to you, Kevin's point in here on the previous graph, is all the way through in here from 1990 to 2003, the U.S. was the largest supplier into Japan. When we had BSE in late 2003, we have not been the largest supplier to Japan. Australia has been until this year, and it looks like finally, all these years later, nearly 20 years later, the U.S. will regain the #1 position into that marketplace. So if you want to put a number on it, what BSE costs this industry, and again, if we're thinking about some of these hard decisions we need to make, that number that it cost our industry was in excess of $30 billion is what we would estimate. So we don't need very many of those things that leave a real mark on our industry and have a huge impact on profitability and the equity position of our producers. So as we step back and we kind of put a bow around a few of these things, these are some of the real positive things that we see for the state of Kansas. The water resources obviously are important. When Kevin walked through that very nicely in here, obviously Kansas grows a lot of feed. Kansas grows a lot of corn, a lot of soybeans, a lot of wheat. And obviously the water resources are key for that, but they're also key for our livestock industries to be able to water our livestock. The Ogallala Aquifer and some of the other aquifers through the state are critical. If we're going to be able to grow these industries over time and sustain them, continue to move them forward and be a major player, that water resource is key. So don't forget that. Location is ideal. Kansas is right in the center part of the United States. If you look north and south, right through the center quarter of the United States, you have 55% of the nation's beef cow herd that is in the center part of the country. So the location is ideal. We don't have as much population encroachment. Again, those are key things in here for our vast livestock production areas that I think will bode well for Kansas as we look to the future. The infrastructure that we have in the state, in the region, is robust. Kevin talked about the increase in capacity of feed yards across Kansas. Obviously, packing capacity is good. The packers have been in a situation, they've made major investments in these packing plants over the last several years because they've had the profitability to do so. And we think we'll continue to see further upgrades in those things. Again, our roads, those things are obviously critical as we have to move as much this livestock as often as we do. Those are going to be critical for us as we look down the road. The ag-friendly local and state governments are key. Again, these are key, and again, I know that's what you all work on a daily and weekly basis, and we can't take that for granted. There's certainly areas across the United States today that we don't have that. And again, all you'd have to do is look at the same deep dive into those regions of the country, and you would see the impact of a not so friendly state and local government on the trends in agriculture in those states. Kansas has also been blessed with a very robust university system with Kansas State, Kansas University, our vast junior college system that helps develop our talent pool. They work closely with a number of the research aspects back into our production industries. Again, that's critical for us. We can't take that for granted. People is what makes our business work, and again, the university and college system is a key part of that. Kansas has had one of the strongest extension networks anywhere in the United States, and that KSU network works closely with producers. They're very well trusted across the state and region, Again, that's unique. Don't take that for granted. That's unique. We don't see that in many other parts of the country. And as Mike shared earlier, one of the key things that I think that why Kansas has been able to grow, you've had a number of thought leaders in the industry over time. Key industry leadership, expertise, people that are pushing the edge of the envelope, that are innovators, they're entrepreneurial in spirit. Again, I think that's been a major boost for the industry there over time. Kevin, weigh in here with us with the long range plan that the industry just passed in here in the latest week. Hit some of the highlights for us. I think this will tie back in here to the conversation we're having with the group.
Well, I think as they put together the long-term plan, Randy, from an industry standpoint, I think we just got to recognize that, hey, we've done an excellent job from growing our demand domestically. We've got to continue to step up and grow that demand, not only domestically, but also globally. That's huge. As you alluded to, we got 4% of the populations in the U.S. If we're going to grow our industry, we have to grow it on the backs of the world. And so we need to recognize that's the case. Profitability, expanding the processing capacity, the packing capacity, I think is key. It allows more of those dollars to flow back from the consumer to the producer. And also, as you develop that, is there other mechanisms? Is it a co-op type mechanism? What it might look like as far as spreading more of those profits over more producers. Intensifying the research, I think that's key. Just sustainability, the message that we've got there, not only from a profitability standpoint looking inward, but also outward as we think about our consumers. And I think the key here is we think about if we're going to be a big player or continue to be a major player in the global trade, traceability is going to continue to be a buzzword that we need to continue to travel and flush out.
Only thing I would add to this is just so everybody is aware, the industry leadership has worked on this plan here over the course of the last year. And we as a staff had an opportunity to weigh in pretty heavily on some of the beef industry things that we see here. Again, these were the recommendations that came out of that long range committee and it was adopted at the mid-year meeting last week. So I think the timeliness of this is spot on with what you're trying to look at within Kansas and the region. I think that's the key thing that we want to share with you on how this ties together with the initiative that you're working on. These demand goals, these are the specific demand goals that we're looking at, is continue to see that demand growth increase of about 1% a year. That's what we've been able to achieve in here. As I showed you some of those trends earlier, we've been able to achieve that since those lows that we made in the 1998 time period. We want to see the beef cow herd stabilize in here, even though, as Kevin made the point earlier, the cow herd got up here at about 31.7 million head. It's contracting in here now. We'd like to see it stabilize if Mother Nature will cooperate with us, not get below 30 to 31 million, and grow it back in here as we go into the middle of this next decade to 32 to 33 million. Again, if we're going to grow the cow herd to 32 to 33 million, that's what it's going to require if we're going to meet some of those export goals, isn't it? But if that's going to take place, we've got to grow the packing capacity. So anything we can do, if you think about the situation that we've had in the state of Kansas with the growth in fed cattle numbers, the growth in annual marketings, if we could add some additional packing capacity in that region, again, I think that would be very supportive to the industry in total. You can argue, does it need to be 5% and 5,000 or 4% and 4,000? The point is, I think Kevin showed you the charts very well. We need to add some capacity. We'll take what we can get in here, but I think it's going to take a pretty focused effort to get that done. And obviously, some of these more equitable margin distribution systems that we see out here, the markets work, don't they? The markets ebb and flow in here. They distribute the margins, but if we're in the business of producing differentiated product that is source verified and has all the bells and whistles, again, those kind of production systems, they cost more, quite frankly. It costs more to produce beef like that. And as you go through them, the odds are good you're going to see some different margin distributions instead of the cow-calf operators and feed yards, for example, just being commodity producers. It becomes a little more of a cost plus kind of an opportunity for producers to participate in those type of systems. The demand goals, again, I think we look at these things, we want to continue to see growth not only in the wholesale demand as we see it at food service and export. Again, food service would represent about 55% of our total beef consumption today. When we talk about food service, we're talking about full service restaurants. We're talking about quick service restaurants. Those are key things for us as we go down the road. Again, as the consumers, we get past this COVID-19 situation we've been in, we think we'll see a renewed focus in that area. And obviously the other piece of this is continued focus on that export demand growth as we look down the road. Food safety is key. Consumers expect our product to be safe. Again, I think we've made huge strides in this as you look at the last 20 years. Larry, I think you can go back to your history in this industry and you think about the first E. coli situations we had 20 years ago. You know, those were very difficult things. The industry developed measuring metrics that we could track those things, we could control it. We've done a wonderful job of improving the food safety. I don't think there's any doubt we have the safest, most wholesome beef product anywhere on the planet. But we have to continue to be number one in that as we go down the road. Again, these export growth items, these things are key. Expanding our access to consumers around the globe. It's estimated that the middle class population could increase around the globe, could increase another 300 to 400 million people. That's a huge opportunity for the United States. Again, that's over the next 5 years or so. So that's a huge opportunity for us to be able to gain additional market share in a growing global marketplace. And again, the adoption of traceability that Kevin talked about earlier, those are key things for us as we move forward. So with that, what I'd like to do, Suzanne, I'd just like to open it up to questions from the group. Kevin, I'd be glad to take any questions from the audience.
Randy, what we're going to do is we're going to have Callahan Grund make a few comments about the U.S. Cattle Trace Program, and then we're going to open it up to questions. So folks, be writing down your questions, getting them on the chat line, getting them into Suzanne, and we'll then throw it open to questions. So we'll get to that pretty quickly, Randy and Kevin. First, want to introduce Callahan Grund. Callahan is a young man that graduated from K-State here a couple of years ago. Fortunate to have him in class and got to get to know him, and was no doubt in my mind that this is going to be one of the young industry leaders in years to come. He currently is in charge of the U.S. Cattle Trace Program, and I think Kansas should be very proud that that effort initiated here in Kansas with the help of KDA, KLA, and other support groups, K-State as well. And give us a quick update, Callahan, on where U.S. Cattle Trace is at.
Sure. Well, thank you, Dr. Cora, for the kind words there. Certainly, I thought a great presentation there by Randy and Kevin, kind of where we're at in the beef industry and really kind of an overall look at where we're headed specifically for Kansas. While they were going, it really speaks to some of the importance and some of the reasons of why Cattle Trace initially was started within the state of Kansas, but ultimately has grown to be U.S. Cattle Trace now. When we used to go out and do these presentations, it was kind of hard for people to wrap their heads around what we were trying to do and build. And I think in the day and age that we live in, the reason that we're virtual right now, the contact tracing of what coronavirus is, I'm sure is one that's at the forefront of everybody's minds, whether it's a friend, a colleague, somebody like that might have said, hey, I know I saw you last week, but I tested positive for the coronavirus, so you might want to monitor your system. So keep that mindset in play when we talk about cattle trace. I know a lot of you have seen and know the background and history of cattle trace and what it is, but want to give a quick update of where we're headed right now as U.S. cattle trace. So this was a slide that I thought piggybacked well off of what Randy and Kevin had there in their presentation as it relates to the beef exports and really why U.S. cattle trace is important. If you look at the 2019 global beef exports there, the top 10 producing countries there, one of them is a voluntary traceability system within their country. These other 7 right there in the gray are all mandatory, and there's only 2 of us that have limited to no traceability in the country, and that'd be us and India. And most of India's exports, which I'm sure they could probably correct me on, gets into water buffalo there as well. So really, within these, especially the major players within the beef export realm, the U.S. is the only one who doesn't have a traceability system in play, especially as we talk about the fed cattle supply. So where we're at now, last year when we talked to you guys, we were just cattle trace. We were still the pilot program that started in conjunction with the Kansas Department of Agriculture, USDA, and then some private industry as well. That includes K-State, Kansas Livestock Association, and some various other entities. And since then, we've grown to what we now call U.S. cattle trace. In January of 2020, we joined our efforts with the Texas, Florida, and Kentucky pilot projects to form what is U.S. cattle trace, to really try to garner and capture a nationally significant animal disease traceability system in the U.S. I think I could confidently speak for all of our partners in that realm that we knew as each pilot project alone, we weren't going to accomplish the goals of a disease traceability system, but together as one, we have a lot more strength there. And we'll get into the slides in some of the states that where it's grown to today. Our vision still remains the same, is to be a producer-driven national leader in animal disease traceability, providing data management system for rapid disease response that's fully accepted by U.S. producers and global consumers. And I think that very last part is something that's really important to why we need a disease traceability system in the U.S., areas that Kevin and Randy both highlighted in their presentation. Our guiding principles also stayed the same as we joined and went up as U.S. cattle trace there. We want to be a hands-free application, hence the UHF technology. We still only collect the minimal 4 data points, that date, time, official ID, and the GPS location of that calf. And then the data privacy there too is really paramount. We're governed by a producer board of directors as a 501c3 nonprofit organization. So our goal is still to develop a voluntary national disease traceability system to include all cattle and complement the USDA principles and regulations. So right here, you can see from pilot to practice. Our pilot project actually just ended at the end of June there. We are now what we call into stand-up phase or transition phase. So that'll be from really what we're in now, starting at the beginning of last month to December 31st of 2022. About that time, having a little technical difficulties there. Let me get it pulled back up. Apologize for that. Thought my internet would be far better here than at home. Apparently I was wrong. Here we go. Okay, we'll get back into it here. What the transition phase or the stand-up phase would be here at the end of 2022. We expect to be a fully operational organization there at that standpoint, focused solely on a voluntary animal disease traceability system. So our governance and operation, you can see a picture of our board of directors there, be the producer board of directors, and then an executive director and program manager, which we've hired within the last year. And then also some various committees focused on some building of what U.S. cattle trace is and what it can look like into the future. So where are we now? We have 13 livestock markets spread across the U.S. in Kansas, Kentucky, Missouri, Oklahoma, and Virginia. We have 17 feed yards and backgrounders, a number of those in the Midwest, but also up in the Pacific Northwest there as well in Oregon and Washington. 3 packers in 6 different locations, and multiple cow-calf producers from all across the U.S. We've had over 530,000 sightings. That would be anytime a tag is read within our system. So since the beginning of the pilot project till now, we've had over 500,000 sightings within the system. We distributed over 70,000 tags throughout the course of the pilot program and retired 30,000 of those tags there as well. So with that, I hope I went fast enough to save us some time there, Suzanne and Dr. Cora, and I'd take questions with Randy and Kevin there as well.
Okay, with that, we've finished our presentation part. We have basically about 35 minutes. We need to wrap up by 12:20 as there is another session coming in. So let's start with questions both for Randy and Kevin and Callahan as well, and then we'll get into comments in terms of where the focus needs to be. Unmute. Okay. So with that, do we have any questions, Suzanne, that has come in that we can start start sharing?
There was a question about slaughter capacity that Kevin and Randy were able to answer while they were going through their slides. So I'll turn it back over to you, Larry, to lead some more discussion.
Okay. I think one of the points, Kevin and Randy, that you shared is very important in terms of growth in the global marketplace. Traceability is obviously a huge part of that, being able to grow that part of the program. Is there something else that Kansas and other states could be doing as you see that global market that possibly could become a focal point of our industry to really help grow that market? And that's a critical piece to the beef industry.
Well, I'll start out and Kevin can jump in at any point. I would say the key thing is we have to continue to do things right. Again, when we look at our industry in total today, from a animal care perspective, obviously what we do there has been critical. I think we've got a great track record. The sustainability piece is going to continue to become more important. Quality has been the driver over time, and I don't think quality is going to take a back seat. Larry, I think we have to continue to provide a high quality product to differentiate ourselves from the other providers of protein into the global market. So I think that's still paramount for us, but I think as we look down the road in here, our real opportunity is going to be adding some of these other bells and whistles to the quality piece. So that's what I would see. And again, traceability, source verified. There's consumers around the world that, hey, they're saying they want that. There's consumers in the United States that say they want that. So I think it's if we want to continue to grow demand and not go through that situation we did from 1980 to 1998 and lose 50% of our demand, we did that because we couldn't do a very good job of responding to the consumer.
Randy, what's amazed me and over the past 6 months as we've dealt with the pandemic here in this country, following the numbers that you folks report weekly, I have been amazed at the margins on quality product. I really thought with the focal point being on ground beef that we would see a fall off in terms of the premiums for premium choice, prime, choice select spread. It's amazing to me the numbers that we have been able to maintain during that period of time. And then the second part of the question, Randy, as we go forward, our mutual friend, Dr. Sticka, that heads up CAB, has shared that he sees maybe as many as 150 to 170,000 restaurants impacted or closed, or they're all impacted, but closed because of the pandemic. Thoughts in terms of why the quality market's been so good, and then the importance of that food service sector going forward?
Kevin, I'm going to pass that to you because I think you can address that specifically from a Kansas standpoint of how good our quality rate has been here and what it's done over time.
Yeah, there's no doubt that as Randy showed us that long-term slide, that quality and consistency improves demand. And I think we just have to step back as being involved in the cattle industry, and we're all done with this, Larry. I think we're going to be able to look back and say, hey, beef demand is a lot better than we've given it credit for. We've given the consumer what they want, a higher quality product, and they're responding by as you're alluding to, still very wide spreads. Everything considered as far as premium, choice, and prime, considering that bulk of that product or a bigger part of that product is now going through food service. So it speaks very well for where we're at with an industry with a higher quality product. The spreads between beef, pork, and poultry, record wide. And they've continued to trend that way over the last decade as we've improved our product. That speaks well for where we're at within an industry. To your question about food service, obviously we're going to lose some food service business. It'll take time to come back. Let's recognize that is a business, though, with a high turnover rate, and that over time business will go out, that new business will come in. There is a spot there, the fine dining, that I think we need to recognize. Without travel, without business expense, there is some risk in that particular category, Larry. So fortunately, more of that product as it goes into food service, hey, we've got a consumer that is willing to pay for that higher valued quality product. So there's no doubt we have to shuffle some demand cards here going from food service into retail. But I think the bottom line and the message is we've got a better product, and the consumer is latching onto that and buying the product.
Kevin, would you mind just giving everybody just a real quick synopsis of how we've seen that retail food service shift since we went through COVID-19? I think that would be an eye-opener of what the markets had to go through.
Yeah, as you think about it, as COVID hit us as we went through the month of March and into April, we sat in there and we saw the food service business drop substantially. Overall, we were down, I believe, 40% at the low water mark as we think about all restaurants and tied together. That numbers came back to a point here over the last 6 weeks where total food service business is down 11 to 14%. Quick serve is down about that. And then your set down dining still remains about 25% below a year ago. So you still have to get the restaurants open. You've got to get them at capacity. Unfortunately, with COVID, the way it's rolled through the United States, a lot of restaurants have been open. They've been closed. They're open to 50%, 75%. So we don't have all the dining rooms back to capacity yet. So it's basically plateaued here over the last month and a half, with total sales down about 11 to 14%. And your sit-down dining or your full-service dining down about 25%.
How much has retail picked up?
Retail has picked up the bulk of that. In fact, if you looked at it from a dollar standpoint, one thing that we have seen, as we had tighter supplies with the tighter production, as you went through the month of April in particular, obviously prices went record high as we went on into early May. Retailer has been rather slow to come down on his everyday price, but we are seeing some substantially better featuring, more featuring at lower values. So that's one way that we're seeing more clearance on product. And so the differential, as we think about retail prices on beef and the other proteins as well, on a pound basis are up about 11 to 12% still year over year.
So Larry, I'm going to jump in and just add one other little perspective to that. Is Kevin did a great job of laying that out. Just give you a little more of a Kansas perspective. The grade in Kansas is as good as it is anywhere. The quality grade in Kansas has grown and improved. And again, I think that's, you can tie that back into programs like Certified Angus Beef, U.S. premium beef, and the impact it would have within the state, with the National having 2 major plants there. Again, the quality grade in Kansas is virtually the same as it is in Nebraska. And 10, 15, 20 years ago, that would have been unheard of. So Kansas has done an incredible job of adjusting and producing as high a quality product as we produce anywhere on the globe.
I do have a question here. Sorry, Kevin, or go ahead.
No, I was just going to tee up that question, Larry. There was a question that I'd answered earlier online, and the question was how much added kill capacity is needed to get us back into balance, and that ties in with the question, Larry, that I'll let you ask here, as we go forward into this conversation, because I do think this is a real key part of the conversation here today. And my answer was, and Randy went through the long-term goals of adding 7,000 head on a daily capacity, which is 1.75 million on an annual capacity. My answer to the question was, if we were to have 2,000 to 4,000 on a daily basis, that's a 500,000 to 1 million on an annual basis. It gets you back closer to the relationship we had back in 2016. At that point in time, what we harvested on an annual basis is what basically the shackle space was on a 40-hour kill week. You know, there's parts of the time of the year when we had big supplies, packers killing hard on Saturdays. There's other times of the year where there wasn't enough cattle to go around for a 40-hour kill. At that point in time, if you go back and look at profits, they were more normalized, you know, somewhere plus or minus $75 to $100 on a head basis versus the 200 or so that we're looking at today. And so that's where my answer came from, is if that were to occur, we would see more of that throughput or more of those dollars come back into the cow-calf producer's pocket. To go ahead and support expansion, you know, then you'd be looking at something between 5,000 and 7,000 on a daily basis. But just to get us back in a balance, a 2,000 to 4,000 a day plant would go a long ways. Larry, I'll let you ask the question, then we can go after the next one.
Right, and I'm going to pose that really to the audience as well as to you folks. As we look through the efforts of this committee over the last 4 or 5 years, certainly cattle traceability last year was one of the focal points, and I think that's a great focal point. And probably, I think we'd all agree, needs to continue to be a focal point of KDA as well as other organizations here in Kansas to keep that effort moving forward. That is so important to global demand, but also to domestic demand to maintain the future. I want to go to this processing question because it seems in the discussion that you guys led, and I'd ask the folks in the audience for reaction to this. We get some comments. It just seems to me that one of our priorities probably does need to be a focus on trying to expand processing capabilities. That is not easy. That means bringing in outside capital, and there are challenges with that. But I would be curious reaction as to whether that should become a key focal point for the coming year. Anyone choose to chime in and comment on that? I think we have a lot of folks out there. I think, Suzanne, we had what, about 120, or what did we have, 130? There's certainly, I know Kansans well enough as they have opinions on things. So I think we need to get a little feedback from our audience in terms of whether this needs to be a priority in terms of going forward.
Well, while they're thinking about that, I have a question submitted through the Q&A that maybe the panelists can take a stab at answering. I mean, it's pretty clear that an increase in packing capacity is needed. Do you guys know if any other states are actively pursuing any additional packing facilities? And also, second part to that question, what can Kansas do to support the expansion of the packing industry in our state? Specifically, if you know of anything that's preventing the expansion that Kansas could be working on.
Well, I'll jump in as far as individual states. If you look at that, it was announced on Friday that there will be a new plant built in Idaho. I believe, Kevin, that was a 500 head a day plant. So it's not a big plant, but it's, again, a lot of these niche plants like that, I think that's going to be the future of our industry. We're going to see more 1,500 to 3,000 a day harvest facilities that are a little more niche oriented to be able to meet some of these potential new demands that Larry was talking about. Again, I think we'll be able to do that, Larry, with plants that are a little more of that size. They're just a little more nimble as opposed to a plant that's harvesting 5,000 or 6,000 head a day. So there is a lot of discussion out in the industry. There's a lot of folks that are looking at this. There's actually outside investment that is also looking at this. I think the numbers Kevin showed, I'm surprised we actually haven't seen some additional growth in harvest capacity over time, just because the margins have been so good. But again, the historical track record, if you look at it prior to the last 4 years, the U.S. packing industry didn't make big margins prior to 2015, did they? And again, I think that's part of what you're looking at out here is historically those were not overly profitable businesses. And Kevin showed us the number of plants that fell by the wayside as our inventory numbers declined in there over the course of from the peak in the 70s to the lows that we had in here in this previous decade. Kevin, anything else you'd add?
No, I think, you know, especially for the audience that are online, as Larry alluded to, there's over 100 folks, and we saw the names of the participants. And you don't have to go very far back in the state of Kansas when there was a poultry plant that was proposed to go in, and it got shot down and it went somewhere else. So it, you know, that we all understand it's state, it's local, it's regional governments and cooperation, and there's challenges when you try to add a plant, you know, from a demographic standpoint and infrastructure. We all understand that, and it does take a lot of government help for, you know, from a regulation standpoint, help, loan standpoint, whatever that might look like, to incentivize that community or new entrants into that community, which would, you know, might be local, might be producer, whatever that might look like. So it's cooperation, cooperation at the producer level, at the governmental level, university level to really make this work. And hopefully as we go forward, we recognize that we've got a great product. You know, the dollars are there. It's just how we distribute the dollars that really have become the challenge the last couple of years.
I wonder too, if when we talk about initial processing, meaning more the harvest aspect of it, but there's also the further processing that creates a lot of added value. And whether that's new product development or the grinding business or some of those, that is also a part of the potential expansion that could occur. And maybe that's a piece of this. I'll throw the question maybe to Mike, and I think Matt Teagarden, you're still on as well. Vibes that you have heard maybe of added processing or further processing capabilities in Kansas that might become reality here in the next 3 to 5 years?
Yes, this Mike. I mean, there's talk. There's some serious interest. I think when you look at the capital that it involves, it kind of makes you pause. And Kevin, if you had that chart going out another 10 years on expected per head profits, and they were very positive, I think you'd see much more, or much less hesitation. Interesting enough, though, on the kind of the niche market, smaller local market, I know our meat and poultry inspection folks have had conversations with, you know, as many as 9 individuals looking to get started or maybe acquire a small plant. And, you know, that may take up a little bit of the slack, or maybe those could be small to mid-size. But there is some interest out there. I'm just curious as to what kind of incentive or what would it take to make it become reality.
Mike, also, are there not efforts in Kansas right now to, one, retain Kansans from a labor standpoint, particularly young people that gravitate out of the state, but also, as I understand, some type of an apprentice program where, and I'm just curious maybe where we're at as an industry on the whole labor area, because that has been a focal point of this committee in years back, from everything from an immigration standpoint to also retaining some of our own people Any awareness or thoughts on programs that are going on in that area, Mike?
I do know our marketing staff has made that a priority, not just in the beef sector, but in other sectors as well, because retaining, recruiting and retaining that talent is critical. And maybe Suzanne or some others want to chime in as well at this point.
Yeah, I know our ag marketing group was working on doing a feedlot experience to get some students experience with what that industry might look like. I do believe that was delayed this spring because of COVID-19 travel restrictions. So hopefully we can get that going again. I did have another question come through the Q&A regarding slaughter capacity, and this question is that one regarding plants that had been closed or went offline. A two-part question. Of those plants that have ceased operations in the past decade, do you think it's possible to renovate or update those facilities, or is it best to start fresh and build new? And then the second part, we've seen current packers be able to manage through an imbalance in market-ready cattle in shackle space by adding Saturday kills. Is that feasible on a more regular basis?
Well, if you look at the, go ahead, Kevin.
No, go ahead, Randy.
If we look at the second part of your question there, I would just say we have done a pretty good job of picking up the slack on Saturdays so far since we went through the COVID episode. And quite frankly, we've got to continue to do that here for the next 3 or 4 months. We need to be able to harvest basically an extra 50 or 55,000 cattle a week on Saturdays to get us to where we need to be. Today, our harvest capacity, we're running 95% of pre-COVID harvest levels. So Kevin showed you 98,000 is what we estimate is the daily harvest capacity in the industry for fed cattle. And we've been averaging 93 to 94,000 is what we just averaged in the month of July. So we're not back to, because of social distancing, more spacing, safety protocols in these plants, all those things, it's nearly impossible to harvest the same number of cattle or to further process on the fab floors the same number of cattle that we had pre-COVID. So the Saturdays are critical. What I would say to you is this: we've been worried for the last several years that we were walking a tightrope. If anything happened in here, we had a fire at a plant, we had any kind of these issues like this, and then bang, it happened last fall with the Tyson fire. We had an episode there, and we were not prepared as an industry. We're just too short on packing capacity, and again, it's happened with COVID-19. So I think Kevin said it well. The industry is not going to respond and grow the herd further without some additional packing capacity. So I think it's a critical decision that we have to make, is figure out how we can make the business climate right for new entrants to come in, more niche plants. They don't have to be big plants, but hey, bring in more 500 head a day plants, bring in more 1,500 head a day plants. I think they will help level the playing field just a little bit. The thing you have to remember in here with this is we don't have to grow demand. Demand is already there. It's just the distribution of those margins. Again, the packers are getting the lion's share of the margins today, just like we were as producers back in 2013. The producers were getting nearly all the margins and the packers were in the red. Quite frankly, that's why they closed so many plants. So the second part of your question is on the older plants that have been closed. Most of those were plants that were the least efficient that they had in their businesses. So they closed the least efficient plants. I don't believe there's any equipment that's been left in any of those plants. And in many cases, there may not even be wiring left in those plants. So I do not expect to see any of those plants that were closed that haven't been reopened already. Again, we had the plant, for example, the Broiler plant in California was closed. It's come back online and is operational. But for example, the Plainview plant in Texas, I wouldn't expect a plant like that to come back online. Kevin, anything you want to add to that?
No, just the point though on the Saturday kills, and the packing community has done an exceptional job, not only after the fire, but also with what we're going through here with COVID to get the cattle cleaned up. They're doing an exceptional job, but also at a very high margin. And so the incentive is there to harvest cattle on a Saturday on a consistent basis. So as we move forward to more normalize those margins, and as Randy said, to push more of that throughput as far as the dollars from the consumer to the producer, added capacity is really the best answer rather than a smaller cow herd.
Well, time slips away on us pretty quickly, and so we've reached the point that we need to kind of wrap up here to meet our time schedule and other commitments that KDA has coming up shortly. To wrap up today, Suzanne, and Mike, any closing comments for the folks today?
Yes, thank you to all of our panelists and especially to our moderator, Larry. I think you're right, we could go on for another hour easily talking about an industry that we all love and would love to grow in our state. So thank you for your participation today. A recording of the webinar will be posted at www.agriculture.gov or agriculture.ks.gov/summit in the next week. Please remember to join us for the crossover sessions on August 17th, 18th, and 19th, and on Thursday, August 20th for the main Ag Summits webinar, where we'll hear from guest speakers and share highlights from the sector and crossover sessions. The Kansas Department of Agriculture is also now accepting nominations for the first ever Kansas Agriculture Heroes program. Since the beginning of COVID-19, Kansas farmers, ranchers, and agribusinesses have performed essential functions to keep food on the tables of people worldwide. KDA established this program as a way to recognize those in the agriculture industry who went above and beyond to serve others and better their community when it was needed most. You're encouraged to nominate any individual, family, or business in Kansas agriculture you feel provided a notable contribution to the agriculture industry or their community as a whole. The nomination period is currently open and will close on August 10th. The nominations instructions can be found at www.agriculture.ks.gov/summit. And with that, I'll turn it back to Secretary Beam for his last closing thoughts.
Hey, thank you, everybody. Thanks to Larry, Randy, Kevin, and Callahan. I think it was spot on, and this will be a valuable resource. I think the highlights for me is the real numbers on the addition of feeding capacity in this state of roughly 250,000. The need for, in the long range plan, of another 7,000 harvest capacity nationwide. I think another factor that they have recognized is the management and conservation of the High Plains aquifer. And what's interesting is if you look at those states and where the cattle feeding sectors are, it's all under the High Plains aquifer, including Colorado, Nebraska, Kansas, Texas, and Oklahoma Panhandle. So I think it's imperative, probably the areas of those multi-state regions that do the best job will be the ones that survive and grow. And then exports, I think, gosh, I can remember the day when it was not a big player in the beef industry, and now it looks like, from what we've heard, we have a potential maybe of making it as much as $500 per head value. So these are very key. I think they're very pointed things to look at, and all of us maybe working together, we can even make the Kansas beef sector a larger, bigger player in the world. Thank you all for participating.